Okay, so welcome back to the channel, everybody. Today we're just going to go through how to identify liquidity zones. So this is something that we like to do inside of the group every single morning before the New York Open. This is going to give us an indication of where we think price is going to go and the targets for the day. So this is the information on liquidity zones that I've quickly writ up for you. So identifying liquidity zones is the first thing we do before any New York session begins. So we like to go to the 4 hour, the 1 hour and the 15 minute and the 1 minute chart. And these are the key areas that we like to mark out. So the key draws on liquidity are the London lows, the London highs, relative equal lows and relative equal highs. So these are the key points that we like to target. So I'll show you how to mark out all of that in a second. So the London session runs from 1 a.m. to 5 a.m. New York local time. So if you're in the UK, you're gonna have to look it up and convert it, but it's pretty straightforward. And relative equal highs and relative equal lows are points where prices move from twice without breaking the original high. So if I had taken the original high, that would be classed as a liquidity sweep, which make it completely invalid. So you're probably asking yourself, why are London highs and London lows important? They are draws on liquidity because anybody who has traded the London session will always have their stops above or below the high or low of the session, which essentially means if prices moved in a certain direction throughout that session, the stops will be at the low or the high of that session. So why are relative equal highs and relative equal lows important? They are important for similar reasons as London. They are points where retail traders have seen a rejection off a support level and will use this to enter a trade and place their stops above and below. Okay, so the trade breakdown that we're going to do towards the end of the session. Okay, so the trade breakdown that we're going to do towards the end of these slideshows. I'm just going to show you a breakdown of a trade that the guys in the group drew. Fucking hell. Okay, so I'm just going to quickly show you this. So this is the group that we've made, which is like a VIP members room where you guys can all communicate and like share ideas of what you think the session is going to do. Obviously, I will still give the signals, but you guys are free to do whatever you'd like to do inside of the VIP chat. If you think you see a better setup, then take it for sure. Do you know what I mean? So you can see the guys in the group actually caught this trade on Monday, which we're going to break down in the later slides. So you can see an obvious sell today. Making tons of SMTs, you should sell today. So it's clearly they understand the method pretty well. So if you're struggling with understanding the concept, maybe it's a good idea to get in here just so that you can maybe talk to these guys, get learning. You know how it is. So I know you guys have seen this chart before, but I just wanted to reiterate it because... Okay, so I know you guys have seen this kind of chart before, or setup, or whatever you want to call it. But I feel like it's so important that we understand exactly what we're looking for. It will almost be the same setup every single time. It doesn't really change, you know. This is kind of the basis. This is all I really look for, to be honest with you. I don't look for too much more. So you can see here, London lows is the target for the session. So this is where we are going to target to have our take profit. Our final TP will always be at London lows or London highs, depending on which way the market's moving. So you can see here the buy side liquidity of London highs was swept during the session that we trade. So we know we're only really looking for shorts now. We're not looking for longs anymore. It's completely irrelevant. So if price now displaces below the last swing low and for a direction to go lower, we know that the market structure has shifted. So all we've got to do now is literally look for a fair value gap inside of that displacement, and then we take the trade. And then we will just target London lows for that session. So these are the news events that we avoid completely. So we have CPI, FOMC, and non-farm payrolls. This is what I will avoid. So we wait for these So we wait for these major news events to pass before we engage with the charts. So essentially, say ISM is a major news event, red folder, comes out at 10 a.m. New York local time. We won't trade at 9:55. We will wait until 10 o'clock. We'll wait until 1 minute past 10. We have to wait until there's been a significant move because of that news candle. So We don't want to be trading FOMC because it's in the evening. CPR we have to wait for, NFP we have to wait for. But FOMC you just want to avoid that day. That's like a free day. That we understand which news events we need to avoid. We understand the setup that we are looking for. Let's just get straight into the charts. Okay, so let's start breaking down these charts. So the first thing we want to be doing is loading up where we're going to be trading from. So as you guys know, we only trade inside of macros. So okay, so now that you've marked out the time sessions that we'll be trading, you want to be breaking it down onto the 15 minutes where I usually start. So we zoom right in, and then you want to be marking out your targets for the day. So you can see this is a data low candle, so it hasn't previously been swept yet. So there's still liquidity stacked below here. So this is a key point that we want to keep an eye on. We also have a London highs in play, so you want to mark that out. We also have liquidity stuck in there. Now let's go on to the 1 hour chart. So another thing that we like to pay attention to is the fair value gap inside of here. So this is a 1 hour fair value gap pushing price up, so we know price is going to come back down to it at some point. So this is essentially how you want to have your charts marked out. Okay, so now you should have your charts marked out something like this before the session starts. So this is going to give you your indicators to where you think price is going to go. So we mark out every single point that we think price will go to. So let's just see how this plays out. Okay, so there we go. We have another news candle coming in. So it's come in, swipe the lows, swipe the highs. So the reason I wouldn't be looking at taking a trade anywhere within here is because it's taken both sides of the liquidity. So there's no pull built up yet. I want to see another attack of either the high or the low to then, that will be the direction I want to be picking. Okay, so now we have a prior sweep of this liquidity. So it's now swept that prior liquidity right there. So now you want to mark out the high that it's just taken. Look a little bit something like that. Okay. Okay, cool. So you can see here, this is the last swing low. So price has come up, taken out the previous high, moved higher to take it out, of course. Then it's created a low, and it's broken below that low with failing to break the high. So there we go, strong close below. So now you can see there is a fair value gap right inside of there, inside of macro. So this is beautiful. So it's very simple now. All you would do is put your short position, your stop above the highs, which is 25 points. So you can see that's a valid stop because it is above the highs. And all you want to do is target either the data lows or the major sell side liquidity. I think on this trade we targeted the daily low, or the data low, sorry. So let's just see how that plays out. So we can see there, let's just put this little sell thing in there because we normally go on about 10 contracts. So we can see there, let's put our stop loss up here. So we'd risk in about $460 for a 3.7k gain. So obviously there would be take profits during the session, but this just gives you a rough idea, you know. So there we go, we can see that price is now coming back to fill this imbalance inside of the charts. So that 1 hour fair value gap that we marked out earlier, it's now coming back to come and take this zone because there's orders trapped inside this area. So it will come back to it. We might have a slight retracement off of it to then come back down and take the data lows, which is the major sell side liquidity for this session. So this trade was super easy to see. Every single person inside of the group caught this. You know, it's very, very, very simple. Because you had the no strong displacement. The displacement is very, very important. You want to see the candle close below the point of the displacement, which is exactly what it did. So there was no reason not to take this. This is a clean setup. And there we go. So it's filled the imbalance. So it comes down, taps its data low. So this is a trade breakdown of what we took. It's very simple. There's nothing complicated about it. People overcomplicate it online, try to make it sound all fancy. It's not. It's really simple. You know, you just got to know what you're looking for. It's the same pattern. You know, essentially it's pattern trading. I know people don't like to say it's pattern trading, but it is. Okay, as I was editing this, I realised I didn't give an outro. So if you guys have any questions, just make sure that you come and message me on Instagram, or you join the group and you can talk to me directly in the VIP chat with all the other members.